Income investors, we already love JEPI and JEPQ, but I have a feeling you might love them even more after their most recent giant dividend payment. We'll go over how big those dividend payments were, how they were able to pay this, and most importantly, will this be a sign of dividends to come? Let's start off with JEPI, the JP Morgan Equity Premium Income ETF. This is a fabulous investment vehicle that offers monthly dividends, large dividends, and excellent market exposure with less volatility. And even with the roller coaster of a ride that 2022 has been, JEPI is down just 14% compared to the market's 21%. And last I checked, SPY, they don't offer a 10% yield. That yield might be even higher if JEPI continues to pay out a dividend like they did this past month, giving out just under 61 cents a share to all of its lucky shareholders. This is just the second time they have topped 60 cents in the past year. It's amazing to just passively hold on to an investment vehicle like JEPI and get paid big returns for doing absolutely nothing. Now, owning JEPI, it gives great exposure to fabulous blue chip companies like Progressive, United Health Group, Hershey's, Pepsi, Coca-Cola, and so many others. Now, JEPI isn't the only great JP Morgan ETF out there. Its new sister ETF, JEPQ, was launched earlier this year. Now, JEPQ isn't time and tested, but its results in its infancy are quite impressive so far. It currently trades at $40.83 a share at the time of this recording. JEPQ is more closely aligned with the holdings of the NASDAQ 100 index, which is typically heavily weighted toward tech companies, but the fund managers are hoping for less volatility while offering a monthly income stream of juicy dividends being sent straight to you. Since the fund's inception in early May, it's actually down about 20%, but that's exactly how much the triple Qs, which track the NASDAQ 100, they're also down the same amount since May. And the triple Qs, they pay a measly 0.72% dividend yield. But here's the magical part, guys. In the past month, JEPI paid a 68-cent dividend, which means despite being $13 cheaper than JEPI in share price, they paid out an 8-cent higher dividend. And if we annualized JEPQ's most recent dividend payment by its current share price, you are looking at a mind-boggling 20% dividend yield here, guys. Which means in 5 years, assuming they just kept paying that same dividend payment, we would have received our initial investment back and we would be playing with house money for potentially the rest of our lives. Now, while I know you're super excited about this large dividend payment, I don't want to burst your bubble, but I have a feeling this might not necessarily be a sign of juicy dividends to come. You see, JEPI and JEPQ, they're not actual companies selling goods and services. They don't sell peppermint mochas, and they don't try to get you to join the metaverse. Thank God for that. They're able to power this powerful dividend through owning companies that pay out dividends, but the vast majority of their dividend is being funded through selling 1 month out of the money call options to generate that monthly income. And in exchange, the fund is giving up some of that upside potential that a stock might have if they do really well and the share price goes up. But yeah, in this bear market, what is capital appreciation, right? The investor on the other side who is buying that option is getting the right to buy the equity at a predetermined price at a predetermined date. What we get in return for that is the premium payments. That's how JEPI and JEPQ are able to give us these giant dividend payments. Premiums are determined by 3 main factors. The overall price of the equity, so the more money that can possibly be exchanging hands, the more money that will be going into our pockets when we sell these options. The level of volatility or risk associated with the equity, so hence this is why some risky penny stocks or SPACs, they have really high premiums. And then we also have the time till the option expires. So selling an options trade 2 years from now, that's gonna be fetching a higher premium than something just 2 weeks out. I don't think it's any coincidence the month after earnings season, these ETFs paid out a larger dividend than usual. Earnings season is when a large group of companies report how their company did in the past quarter. They'll give an outlook for the future, and so many companies do this in a short amount of time. Earnings season always comes with a lot of volatility as a company can report good or bad earnings, and the stock can really fluctuate in a very quick amount of time. We saw trillion-dollar companies like Amazon and Google go down 10% in one day. That is ridiculous to see billions of dollars of market cap evaporating in just minutes. But of course, that means the premiums associated with these stocks will be juicier because of that uncertainty. So looking at JEPQ's dividend history, the month succeeding earnings season is the biggest in this tranche of 3 months, 1 quarter here. One that had earnings season is the biggest. And if we look at the quarter right before that, we can also see that the month that succeeded the earnings season, there was another earnings season in late July. That was also the biggest in this tranche. Keep in mind this November, we also have lots of uncertainty with inflation, and we have the midterm elections coming up, among other things, which may have caused even more volatility. So that's just my theory on why these dividend payments were so large this past month. Do I think they will continue in the future? Possibly. I'm just gonna assume in the future the month that succeeds earnings season will have a bigger payment than other months, but eventually I do think the economic problems that we have right now, that will one day be fixed, I hope. In the meantime, we will continue to enjoy our income ETFs who provide us monthly dividend cash flow. It's great enjoying cash flow from assets we can buy with less than $50 that will continue to pay us every single month for the rest of our lives for doing absolutely nothing. Now, I made this video because of a comment from a viewer, so if you ever have any video requests, please let me know in the comments below. These videos do take a lot of time for me to research and edit. All I ask is that you hit that like button for the algorithm and are subscribed for more investing updates. As always, my videos are always found in podcast form under the Collect Cash podcast name. Podcast is really growing, so I appreciate all the people that watch.